And for an early look at what we should be expecting from the market today, we're joined by Evan Lucas from IG in Melbourne. Good morning to you, Evan. First of all, I want to ask you about the oil price. We just showed viewers there. It's sort of moving around in early Asian trade, but overnight, once again, higher. I know that Egypt came into play, but there was also an inventories report out, which also helped sentiment, wasn't there?
There certainly was, Kate, and it was very interesting to see over in the US that they've actually got their inventory levels probably at a level we haven't seen since November last year. So it is starting to fall off, and that caused an even greater spike, seeing obviously NYMEX crude up to about 102.6 at the absolute top, which roughly came around about 1 a.m. last night. So it has slid back a little bit. Obviously, the talk, the fact that now that Morsi has actually been probably overthrown by the military sort of leadership over there, and that will probably bring it off. The other thing that will probably sort of hold any sort of movements regarding what's happening in Egypt, it is the 4th of July over in the US as well, so the markets from NYMEX and also from the WTI is also closed, so it does make a little bit of difference. But in terms of what it means for us, flowing further forward, the fact the Aussie dollar has slid back under the 91 cent handle. We've also seen that we have a flow-on effect with regards to the petrol price. You might actually see petrol pushing through 160, even as high as 162 a litre in the next 2 weeks, as we do push lower on the Aussie dollar and the spike in the oil price. So it is unfortunate from local consumers, but it is also good to see that maybe that geopolitical sort of problem that's going in Egypt may come to an end sometime very, very soon.
Yeah, absolutely. Let's go to the United States, because we saw a widening trade balance there and also a jobs report which was a little better than expected. Did this rub off on the markets at all? There wasn't too much movement in that shortened session, was there?
No, there wasn't a huge amount of movement from that shortened session. Obviously, again, getting back to the fact that 4th of July is today and obviously tomorrow night for the US, it did shut at 1 p.m. But the interesting thing coming was probably out of the trade balance. And it gets back to the whole sort of talk we're hearing from the FOMC that things are starting to get a little bit better. We have seen consumer confidence get better. And their trade balance was actually 12% wider than expectations at $45 billion in terms of the trade deficit. It did show that imports are actually at levels we haven't seen since about November 2011. Mobile phones, car automobiles and also fuel really picking up the slack there. There's a real big sort of change in consumer confidence and consumer spending coming out of the US, but at the same time the trade balance also showed that exports are absolutely stagnating, particularly into Europe and also into China, and that also we've seen in the figures coming out of those two continents as well. So it is a very interesting sort of figure. I think it's probably the one that most people will take out of what's going on. It does suggest that the FOMC is correct in saying that things are getting better. And then the fact that you alluded to, the ADP numbers were good. They're around about 188,000 jobs added, and that probably alludes to what's happening on Friday night. The main one that we're going to be watching is the non-farm payroll and that unemployment change. The expectations are for around about 166,000 jobs added in the month of June, and also that the unemployment rate will drop to 7.5. So all of that comes back to what we've been hearing from Ben Bernanke, also from Bill Dudley, who came out the night before saying that things were getting better. Tapering is probably yes on the cards, and it will happen soon, considering the fact we are seeing a bit of a rosier picture. So it was good data from that perspective, and the market actually responded positively to it, which is another good thing to see, that people are starting to come around to the whole idea that tapering does have to happen and will happen soon, and how we're going to cope with that going forward.
Evan, interesting to note the Aussie dollar's reaction to the RBA governor's speech yesterday. We did see it fall sharply. He did make an off-the-cuff remark about it being a very close decision as to whether or not the central bank cut rates earlier this week. Was that tongue-in-cheek, or did he mean it seriously?
Yeah, it's a good question, and I think it's almost like a Ben Bernanke moment that happened back in May, when he responded to a question from a governor asking whether or not they would taper, and it's sort of, yeah, again, off-the-cuff remark. He got a question from a journo and he did respond saying that, yes, we could sort of look at doing something along that. We did deliberate for a fairly long time. We did talk about the Aussie dollar and the fact that we still think it's stubbornly high, and all of that sort of culminated, and it absolutely lit up the swaps market. If you have a look at the swaps market, they're now pricing in a 57% chance of a rate cut next month and an 83% chance by the end of the year, and that all got basically more and more onto that pair. The Aussie dollar, US dollar really pulling all the way down to, at last night close, low of 90.3. It's popped up a little bit this morning, but it does suggest that the RBA is well and truly looking at putting its finger on the button. If things don't sort of pick up anytime soon, we understand the federal election's probably clouding a little bit of confidence and a little bit of judgment, but it was interesting to see that his comments comment really did move the Aussie dollar, and therefore we will be watching the low response today. Obviously, Philip Lowe is on the wires, probably around about 12:30 this afternoon, and he's also been somebody that's been very, very close to what Glenn Stevens says. And if he does come out with something similar to what we saw yesterday, it could see the Aussie dollar even pushing down to that 93 low that we saw last night. Sorry, 90.3 low we saw last night, and going even lower again. So it was an interesting comment. It does suggest that the RBA is watching very, very closely. They don't think things are moving as fast as they probably could, and if they have to, maybe cut again.
Okay, and Evan, building approvals, we've got those out today. What are you expecting from that data?
Yeah, building approvals does look like going backwards, and that obviously goes back to what we saw yesterday from the HIA figures from new home sales. They also contracted to 1.2% last month. Building approvals today does look like it's going to drop into the negative area. There is a talk of about minus 0.9% for this coming month. So it is disappointing. It does suggest that, again, that sort of housing market that the RBA is talking about and that non-mining sector is still yet to pick up the slack. A lot of people are sitting on cash, a lot of people are sitting on their hands, making sure they don't overextend themselves, and obviously going into things like property as an asset is quite an expensive thing to do. So that building approvals just probably reiterates what we saw from retail sales yesterday as well, and the fact that we're not seeing any major sort of change in that kind of data. So again, it's another effector on the Aussie dollar. It will probably drag it lower if we do expect to have a bad figure read from today.
And Evan, opening calls for the market today. Gosh, we've been on a roller coaster ride this week. Gains or losses of 2% every day. Today, do you think we'll see another wild swing?
Yeah, and the interesting thing, as you just alluded to, is those wild swings. If you actually have a look at the last 7 of 10, we've moved through 1.4% plus or minus. And I think even though we are pointing up about 0.66% to 76.66, you may actually see that continuing. I think you've got a fairly volatile commodities market. We saw iron ore popping up, gold popping off slightly, and then all the metals in between sort of moving around. And BHP is a prime example. Its ADR is pointing up 0.4 to 31.17, but it's moved through roughly around about 3% moves plus or minus over the last 3 trading days. So the volatility is very hard to explain, but it does look like it probably will continue today. We've seen the dollar yen also moving through that again, and that Asian market's what's been moving us as well. So yeah, good start to us today, but it wouldn't surprise me if that volatility and those really violent moves up and down continue.
Okay, Stan, thanks so much. Evan Lucas from IG, appreciate your time.
Thanks, Kate.
Said